Hello everyone, welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPlass. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. And that certainly applies to the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 or the Nasdaq 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm a thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the underlying asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. All right, let's get started. Here's my agenda for today, Wednesday, July 2nd. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups earlier today. Then I'll get to the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. And we've reviewed setups to understand what traders have been doing earlier today, how they've been positioning themselves. And we'll use that to frame our look at the live market just after that. All right, let's get started. News items, economic data, and events. All right, so today the ADP jobs report came out. That's the private payrolls. Came out at 8:15 a.m. Eastern Time. And that came in lower than expected, actually negative. So it was less than previous, less than expected. And that was at 8:15. Looks like there was a little bit of a negative reaction to that data. So that was the ADP private employment or jobs report. All right, also Tesla. We'll take a look at Tesla in a few minutes. Tesla reported deliveries. It was low, but not as low as expected. And Tesla has been moving around quite a bit based on that, and also, of course, the startup of the conflict between Musk and Trump has started up again, and that caused a big drop in Tesla yesterday. All right, tomorrow coming up, jobs report. Normally on Friday, of course, Friday is the 4th of July holiday, so the normal jobs report is out tomorrow instead of Friday, 8:30 a.m. Eastern Time. Then at 10 a.m., ISM services data comes out, PMI services data for ISM. And then the stock market closes midday. So I believe that's 1:15 tomorrow, or I think it's 1 p.m. tomorrow for the stock market. Then let's take a look at the futures market, a little bit complex here. So this is the CME holiday schedule, and we'll just look at equities here. So tomorrow, it's a half day for equities. So equities futures close at that's Central Time, so 1:15 p.m. Eastern Time. Then reopen normal time. Normal reopen. That's 6 p.m. on Thursday. So Thursday afternoon, futures closed, and then close Friday at 1 p.m. again, 1 p.m. Eastern Time. So that is the schedule for futures. And of course, again, stock market's closed midday tomorrow and closed all day on Friday. And hello, Sky Blue. Welcome. Glad you're here. All right, so that is the schedule. Let's move on to positional analysis now. Let's go to the S&P 500. And again, there was the reaction to the 8:15 a.m. ADP private employment report. And then market has rallied pretty much just after the cash open. Cash open right here, 9:30. A little bit of a quick drop, and then market has rallied up toward the SPY 620 absolute gamma strike call wall. All right, before I take a closer look at this chart, let's step back. Let's take a look at a higher time frame. I'm going to go to SPX, the underlying index. This is a one-year chart, 1 day, 1 year chart in Thinkorswim for SPX. And of course, I did talk about this on Monday. The recovery, the V-shaped recovery is complete now. That began right around February expiration. V-shaped recovery and a low actually before the cash open, right at 4,800 and all the way up now to over 6,200. So a very fast recovery from 4,800 up to 6,200. All right, let's take a look now at a shorter time frame. Let's go to a 30-hour, 30-day 1 hour chart. So this is all right, so the rally, little bit of a pullback week before last. Then last week, rally resumed, and now SPX making new highs. And we'll take a look at this new high level in just a minute. All right, so rally continues. A little bit of rotation yesterday out of tech and momentum stocks, and it looks like that may have been a short-lived pullback. All right, let's take a look at the levels on this chart. First of all, the expected moves. Dashed purple lines showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. And I do post both those levels in Discord every day the evening before. All right, so SPX trading within those ranges and heading up toward the upper daily expected move today. All right, let's take a look at the Spotgamma levels on this chart. These are shown with the dark red lines. They're available to Spotgamma subscribers, and they're available on a variety of trading platforms. Again, this is Thinkorswim, 30-day, 1-hour chart. I'm going to point out the key daily levels. First of all, the put wall is at 5,900. That's a strike with a large net negative gamma that can be expected to act as support. And that level did move down from yesterday and from Monday. And yesterday, both the volatility, the put wall and call wall were both distorted by the Captain Condor, iron condor. That condor is not in place for today. So the put wall has moved back down to a more normal level at 5,900. Again, that is lower than yesterday. Next level up is the 6,000 absolute gamma strike. So that's the strike with largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. The next level up is the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. So that tends to subdue or decrease volatility. And this is based on Spotgamma's older model. We'll take a look at gamma in just a couple minutes based on Spotgamma's newer model, the synthetic open interest model. All right, so the volatility trigger, just like the put wall, did shift slightly lower from yesterday. And then finally, the call wall is moved up to 6,300. That's a strike with a large net positive gamma that can be expected to act as resistance. So with the call wall moving up from, is actually 62.35 yesterday based on the iron condor, but it moved up to 6,300 today, giving SPX more room to run higher up to the 6,300 call wall now. And it had generally been around 6,200 before. All right, so that's the range, 5,900 put wall on the downside and the 6,300 call wall on the upside. All right, let's wrap up our view of SPX with a 1-minute chart. All right, so the rally that began last week has slowed down a bit. And what I was showing here, this was around 62.10. That was resistance yesterday. The dark shaded portions are the regular trading hours. So that was resistance yesterday. And SPX broke up above that level. And now that looks like that level acted as support. Let's zoom in on this so we can get a closer look. All right, so that zone around 62.10 acted as resistance yesterday and then support today. All right, so that is SPX. That was a 1-minute chart. Let's take a quick look at SPY. Just to show up above the call wall is at 620. And for SPY, there were no shifts in levels. So that's a call wall up above for SPY at 620, upcoming level. So that would be the next primary target if the S&P 500 continues to move higher. All right, so back to Bookmap now. So there's that SPY 620. That's the absolute gamma strike and call wall. Note the liquidity just below that. Those are limit sell orders. The heat map of Bookmap shows a history of limit orders in the order book. And those are limit sell orders. It looks like ES is bumping up against those limit sell orders. And also there is an SPX resistance level at 62.22, just below that. And again, the limit sell orders. And we'll see in just a minute that there's also a positive gamma level centered right around 62.25. We'll take a look at trace in just a minute, which would be right around 62.74. So that would be right around here, that positive gamma. That may be subduing price for moving higher. All right, note there is a difference in price between ES and SPX, and today it is right around 49 points. So I'm showing ES minus SPX equal 49. So I have SPX 6200. That is a large gamma 2 level. That was also noted as resistance at 62, ES 6249. So that offset is 49 points today. And I do post that in Discord every day in the morning. All right, so that is SPX, the levels in play. Let's take a look at QQQ now. QQQ weak yesterday, and when I checked earlier today, it was the strongest index today, making up for yesterday. All right, a lot of levels in play for NQ here, and you can see this is the NQ upper daily expected move. I don't post that, but I do calculate that, and I add that to my price lines chart. So that's a key level. NQ upper daily expected move, and I've noticed over time that NQ does react pretty frequently at the lower and upper daily expected moves, and that level acting as resistance today. And for today, the NQ expected move, and this is based on the closing price for NQ from yesterday, was right around plus or minus 146.5 points. All right, let's take a look at the underlying index charts, then we'll get back to Bookmap. I'm going to start with QQQ. All right, so very nice, steady rally from the cash open up to the 550 call wall. So that is and that's also the absolute gamma strike. All right, so 550, the absolute gamma strike and call wall, and now QQQ has been consolidating around that level, and also that is, again, slightly below that NQ upper daily expected move. All right, that's QQQ. Let's take a look at NDX. And for NDX, these levels here acted as support just after the cash open. And that is the NDX 22,451.0 gamma level and 452 combo 3 level. All right, so that is and also this 500 level, that's a large gamma 2 level. Looks like that 500 level, 22,500, acted as resistance, then support. All right, that is the QQQ and NDX levels in play. And just like the S&P 500, I marked the key index levels on I do mark the key index levels on my chart. And Sky Blue asked, plotting all these levels on the chart, do they help in trading? I would say, well, you know, certainly, but I would say judge for yourself. So you can see right here, this is just around the cash open, that 430 level, acting as support. And actually at the cash open, remember that 451, 452 level, acting as support. And then all the way up to the upper daily expected move. And then consolidating around the QQQ absolute gamma strike call wall. So Sky Blue, judge for yourself. I think they do. I would not trade the indexes without these levels. I don't see how anybody could do that. These levels are very important. All right, so that's NASDAQ. And for NASDAQ, NDX, volatility trigger, put wall shifted higher. And also the absolute gamma strike shifted lower. And note the call wall is the lowest level for NDX. So the put wall and call wall are inverted for NDX. And NDX, although price does react at NDX levels, NQ does react, it is a little bit thinner than the other index components. And then for QQQ, the volatility trigger and call wall shifted lower. All right, we'll take a look at setups in a few minutes. Let's wrap up our positional analysis by taking a look at Gamma. First of all, a quick look at market maker's position on the Gamma curve at the beginning of the day. This is based on Spotgamma's older model. And this is for the S&P 500, NASDAQ, Russell 2000. I still like to look at this for a reference point. Note all these numbers, with the exception of IWM, are positive. And remember, in a positive gamma environment, market makers have to trade against price to hedge their delta exposure. And that tends to, again, subdue or decrease volatility. All right, let's take a look at the trace tool now. This shows the current synthetic open interest view of gamma. So this is for SPX. And this is the trace gamma heat map. Blue shading is showing positive gamma, red shading negative gamma. So again, remember, positive gamma, market makers, they're trading against price. Red shading negative gamma, market makers, they're trading with price. Let's step back in time just a little bit. Let's go back toward just after the open. Focus on this strike right here, the 62.25. The blue bars, that's positive GEX, gamma exposure, market makers gamma exposure. So at the opening, SPX was in a zone of positive gamma. And note also the stability index, just below 50% here. So it is higher than it has been in recent weeks. All right, let's step through time. So you can see the gamma exposure at that 62.25 level increasing. Now starting to decrease maybe just a little bit. Increasing again. All right, so now also building up at the strike just above that at 62.30. So that's where this positive gamma is right just above the blue shading, positive gamma. And as SPX moves higher, this should act to subdue price, act as a resistance. And Sky Blue asked, could you please explain the difference between gamma levels and open interest? All right, so what Spotgamma's looking at is gamma-weighted open interest. So gamma's, in its simplest term, is the rate of change of delta. So it's a second derivative. And gamma's greatest at the money at expiration. And then open interest, of course, is the open interest at any particular strike. The number of options held could be short or long. Open interest, of course, changes during the day, but that information is only available once a day, sometime overnight. But gamma, of course, is changing during the day, and that's what's shown here. So as price approaches this 62.25 level, of course, open interest, that number from last night is not changing. I think Spotgamma is doing something to detect the contracts there, but the gamma is definitely changing. So as price approaches that, expiration approaches, that gamma is increasing. And those are the important levels where volatility may increase. Market makers have to hedge at those levels. All right, hope that helps. Let's zoom in just a little bit there. All right, so let's move on. Let's take a look at some setups now. So based on this, I was looking for lower volatility for today. All right, so let's move on now. Let's take a look at some setups. I'm going to start with the S&P 500. So I'm going to look at the S&P 500 and the Nasdaq and then a few stocks. All right, so let's start with the S&P 500. And this is the hero signal, Hedging Impact Real-Time Options, HIRO. And this is available to Spotgamma subscribers. And this chart is showing and Sky Blue asks, is the price attracted towards the open interest level or gamma? I would say both. All right, so this is the hero signal. White line is price for SPX, and the purple line is the hero signal. And it is showing options trades and market maker hedging activity in real time. A rising hero signal indicates traders are taking positive delta positions. They are buying calls and or selling puts. Market makers take the opposite side of those trades, and they hedge their delta exposure by buying ES futures. And a falling hero signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. And again, market makers take the opposite side of the trades, and they hedge their delta exposure by selling ES futures. All right, so this is the S&P 500 index signal, showing options trades and market maker hedging activity for the S&P 500 index components. That is SPX, SPY, ES, and XSP. There's another signal that we can take a look at for the S&P 500, and that is the S&P 500 equities. So this is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. All right, the purple line is showing calls and puts. Let's separate out calls and puts. So you can see the orange line showing calls, blue line showing puts. A rising orange line indicates traders are buying calls. So they're back to buying calls. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. So after a little bit of a choppy start here, you can see right around 10 a.m. the call buyers get serious and start buying calls. And they slow down right around 11:20 or so. But overall, they're still buying calls today. And from right around 10 to 11, 10:10 to 11, they were selling puts as well. But it's mainly call buyers in equities driving price. Let's go back to the S&P 500 index signal. And you can see it was call buyers from the open in the index components driving price. So the call buyers are back, driving price higher. Let's take a look at, let's go back to ES now. Zoom in on this. We'll go from about 9:30 to 12:30. All right, so there's a quick flush at the open. You can see all the magenta volume dots. Those are volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. A lot of sellers at the open. Sellers become exhausted. Some buyers come in, pull back entries. As traders were taking positive delta positions, again, remember the S&P 500 equity signal showing call buyers in the S&P 500 equities. Price moves higher. The dark blue line here that changes from magenta to dark blue showing cumulative volume delta increasing. So aggressive buyers driving price higher. Some resistance at the SPY 619 level. So there you go, sky blue again. Just a round number level, SPY level. Around that level acting as resistance. And then running into these sellers up above. As the call buyers slow down, let's go back to Hero. So you can see the call buyers slow down right around 10:45. Let's go back to the ES chart. And that's about when price starts to slow down. 10:45, quick drop, and then the uptrend slows down. All right, so that's the S&P 500 index. Still grinding higher. Nice pullback entries at this trend line. And always bumping up against all the liquidity right around 68 to 71. All right, that's the S&P 500. Let's go to Nasdaq. Similar chart, just a lot more range. Pre-market support or pre-cash open support at, that is QQQ 545, large gamma 2 level, and then also the NDX 22,390 volatility trigger, and of course also the NQ 22,600. So that cluster of levels acting as support, and then after the cash open, again that 430 combo level acting as support. Or actually just before the cash open. Let's see. Yeah, 923. All right, so let's zoom in on this just a little bit. And Sky Blue also asked, does Bookmap show all the passive buyers and sellers, the entire liquidity, or does the liquidity come all of a sudden from somewhere else, also that is not displayed? All right, so as far as I know, Bookmap is showing all the liquidity for futures. So we'll talk about futures. So this is data from CME for the equity index futures. So as far as I know, Bookmap is, and I'm using Bookmap data, is taking that data directly from CME, so showing all the passive buyers and sellers. Of course, there are iceberg orders that are partially hidden. So Bookmap does not show those orders until they're filled. So yeah, there are hidden orders. And then the liquidity can change pretty rapidly as buyers and sellers come in. We'll take a closer look. We'll go back to ES in just a few minutes and take a close look at ES and see that there are buyers and sellers coming in all the time, passive buyers and sellers. And that's shown with the ever-changing liquidity in the heat map. And also there are often algos that will track price up and down. So that liquidity is always changing. All right, so here's NQ. So remember in ES there was that flush right at the open. Not the case with NQ. Trend break there and then a move higher. Aggressive buyers started to come in, shown by the magenta to dark blue line, as well as buy stop orders fuel that move higher, and a very steady, nice uptrend up to the upper daily expected move. All right, so that's NQ. Let's see what options traders are doing. So let's take a look. First of all, the Nasdaq signal. So just like the S&P 500, there are two signals that we can take a look at for Nasdaq. The first is the Nasdaq index signal, showing options trades and market maker hedging activity for NDX and QQQ. And you can see traders are buying calls in NDX and QQQ. That's shown by the rising orange line. Traders buy calls, market makers sell the calls, and they have to buy NQ futures to hedge their delta exposure. So very clear correlation here between call buyers in NDX and QQQ and the price action in NQ. All right, there's another signal that we can take a look at for NASDAQ, and this is the MAG 7 signal, showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. And these stocks make up a very large component of the NASDAQ and the S&P 500 as well. And the way these stocks go it has a large impact on the price, on the action of both NQ and AS. All right, so traders buying calls in the MAG 7 stocks after dumping some of them yesterday. They're back in them today. We'll take a look at some of those stocks. So buying calls from the open. Also for a while from 10:10 to 11, selling puts. And then that slowed down right around 11:15. So the put sellers stopped first, then the call buyers, and now price consolidating. A very classic pattern, bullish opening drive, a little bit of bullish momentum when the orange line and blue line move in the same direction. That's a very powerful directional indicator. And then call exhaustion. Bullish opening drive, bullish momentum, and call exhaustion, now price consolidating. So that's NASDAQ. All right, back to Bookmap. All right, again, remember when the call buyers took their foot off the gas. Right around 10:45. And then price ran up to the upper daily expected move and now consolidating. And there are some limit sell orders up above as well. All right, that's NASDAQ. Let's take a look at a few stocks. First of all, Apple. I think it was the strongest MAG 7 yesterday. Very strong this morning. Very bullish opening drive. Not really characteristic of Apple. But the dip buyers have come in for Apple now, I guess, after the start of the new quarter. All right, so let's see what options traders are doing in Apple. Let's go to Apple. Again, this is not really characteristic of Apple, but very, very strong opening drive. Call buyers come in for the first 25 minutes. So let's take a look at this chart. First of all, flow alert comes in just after the cash open, signals significant options activity, get your attention. And you can see all the call buyers. Of course, the thing to do was try and get long any way you could. Apple sliced right through the 210 call wall key gamma strike. And when price slices through a call wall like that, that can contribute to the move higher. So the call wall, that's where again, remember, that's where most of the calls are concentrated. And the assumption is that traders are long calls, market makers are short calls. As the price moves higher, those calls go deeper in the money. Market makers have to continue so market makers' position is becoming more negative, delta negative, and they have to continue to buy stock to hedge their delta exposure. All right, so again, bullish opening drive, a little bit of bullish momentum, then call exhaustion, and now price consolidating. So that's Apple. Also, you can see all the green volume dots here. A lot of aggressive buyers in Apple. And Bulldog asks, is flow on Spotgamma a good entry signal? So let's take a look at that. So I look at the flow alert as I assume that's what you're asking, is flow alert. So Hero hedging flow alert alone is just a confirmation that I should be looking for an entry in the direction of the hedging flow. Now, as far as an actual entry signal, let me show you something. Let me turn on this. One thing that I use to help with entry signals. So I know that traders are aggressively buying calls in Apple. I'm going to turn on this market pulse price change that I use to help to find long entries, pullback entries. All right, Sky Blue, I'll get to your question in just a minute. Very good question. All right, in a very strong rally like this, sometimes these pullback entries are a little bit difficult to identify. What I use is this market pulse price change, these pullback extremes to help identify pullback entries for a long. And sometimes, again, when price moves so fast, those extremes do not occur. But I'm looking for pullbacks. So you may see this on a candlestick chart as well. But I'm just looking for any pullback to get long. Now, in some stocks, and I showed a great example of this yesterday on Monday in Circle, some stocks will have liquidity levels and they help to identify entry points as well. So I showed a great example of that in Circle on Monday. And I did post that setup in Discord as well. So this is what I'm looking at. So I see the floor, gets my attention. I see the rising call line. Then I go to Bookmap, and I see the rising cumulative volume delta, price rising, making a series of higher lows. So I'm just looking for one of these lows in Bookmap to find an entry point. And again, all right, so Sky Blue asks, are we able to tell if individual stocks like Apple are in positive or negative gamma environment? All right, so let's go take a look at Apple. Let's go to Equity Hub. We'll take a look at Apple. All right, so Apple, let's go back and check price. Price for Apple. right around 211. All right, so according to this, Apple is in positive gamma. So there's 210. And 210 looks like potentially zone of negative gamma there. 210, 211 shifts to positive gamma at 215. Let's take a look at put and call gamma. So you can see the negative gamma right there at 210, and then shift to positive gamma at 215. So what this looks like to me, next expiration gamma, total gamma. So what this looks like to me is a pocket of negative gamma. Right in there. From 200 to 215. And this curve is showing the more of the overall picture. All right, back to Hero. And for trading during the day, I'm mainly looking at Hero. And you may look at this for planning. So if you're back to Equity Hub, so if you're planning, if you want to trade Apple or take a position in Apple, certainly look at this for planning purposes. But during the day, I'm looking at three screens. I'm looking at Hero on my left screen, Bookmap on my right middle screen, and then a trading platform on my right screen. All right, so let's go back. Next stock I want to take a look at is Nvidia. All right, so the buyers are back in Nvidia. Let me turn on Market Pulse in Nvidia, see if we can get a little bit better example. All right, let's see what options traders are doing in Nvidia. All right, it took a little while to get going. Let's zoom in on this. So there was a brief bullish opening drive. Not a lot of conviction there. Nvidia bumped up against the 155 key gamma strike, found resistance, moved down a bit, not quite to 154, and then the call buyers, note the flow alert there, comes in, and the flow alerts can often signal a shift in hedging flow, in this case from negative delta to positive delta. Flow alert, get your attention. Hedging flow shifts from negative delta to positive delta. Call buyers come back in, and then price starts to move higher. You're welcome, Sky Blue. Sky Blue asks, please suggest a high probability trade setup that we could have taken for today as per your rules. Also suggestion for rest of day. So first of all, the Apple example was great. Again, very bullish opening drive. And you just have to track these stocks from day to day and know that Apple has been in play. Was yesterday. I think, again, it was the strongest Mag 7 stock yesterday. It has been beaten down. New quarter. Looks like traders are coming back into Apple. Also, Apple has been some discussion about AI models and Apple. So keep track of the news, watch price action, watch Hero. So just looking at the information that we already had about Apple, just from today, very bullish order flow and hedging flow in Apple. So that was a very, I guess, a clear setup. Nvidia, bullish opening drive, bumps up against the 155 key gamma strike. Call buyers come in again just before 10 a.m. Price moves higher. So let's go take a look at Bookmap. Nvidia. And here Nvidia, market pulse price changes, helping to highlight the deeper pullbacks for long entries in an uptrend. Liquidity in the heat map, limit sell orders, acting as magnets for price. And note, Nvidia made it up to 157.50. Limit sell orders, and then move lower. So that was just after 11. Let's see what options traders are doing at that time. Back to Hero. So it looks like, in the case of Nvidia, the price started to move lower before the call buyers took their foot off the gas. And then they resumed right around 11:45. All right, so that's Nvidia. Next stock, Tesla. Again, Tesla's definitely been in the news. Nice V-shaped recovery. So Tesla, first of all, bearish opening drive. Then a sharp recovery. So there were, at the open, call sellers, put buyers, and they quickly shifted. And Tesla moved up to the 315 hedge wall, bumped up against that level, and has stuck there ever since. So 315 hedge wall acting as resistance. So let's go to Tesla. Tesla is a great stock for trading, heavily driven by options trades. All right, here was the news about deliveries that came out right around 9 a.m. Initial bullish reaction. And that continues after the cash open. There's the cash open, big magenta volume dot. And then a sudden reversal right around 305. Sellers are exhausted. Buyers start to come in and move Tesla up to the 315 hedge wall. And Tesla continues to chop around that level. All right, so nice setup in Tesla as well. Bearish opening drive, then a very sharp reversal. Looking at Bookmap and Hero hedging flow, combining both. You can see the rising cumulative volume delta. Zooming in a little bit, we can see that sellers were exhausted, aggressive buyers coming in. So again, I'm combining order flow in Bookmap and hedging flow in Spotgamma Hero to determine who's driving price, and then watching price reaction at various levels. So pretty clear setup in Tesla here as well. All right, next stock I want to take a look at is Robinhood, another stock that has been very strong recently. Bullish opening drive. Let's see what options traders are doing. Go to Robinhood. Let's zoom in a bit. So it looks like from the open, aggressive buyers, call buyers not doing a whole lot, but a flow alert does come in, signals significant options activity, gets your attention. So the call line was rising as price was moving higher, took the foot off the gas. And then this is what I call an institutional kickoff right here. So these vertical lines are large institutional block orders. So that was a large order, buying calls, and then price consolidated a little bit more. Then the retail traders came in, buying calls, and price started to move higher. So that was right around 9. Well, I guess that price actually got going higher right around 10 a.m. Then very typical pattern for stocks. Overall bullish opening drive up until a little bit at maybe 1040, 1035, 1040, up to the 100 call wall. Call buyers take the foot off the gas, call exhaustion, and price now consolidating around that level. And we have certainly seen that pattern several times today. Back to Bookmap. So Sky Blue asking suggestion for rest of the day. As far as stocks go, the good trades were this morning, and that is almost always the case for stocks. We can take a look at the indexes if I have time. I only have 4 or 5 minutes left. All right, that's Robinhood. Back to Bookmap. So again, bullish opening drive up to the call wall. You can see, remember the calls initially from the open weren't moving much, but the green volume dots, this was aggressive buyers, up from 91 to 95 at the open. Then the call buyers came in again right around 10, driving price up from 95 all the way to the 100 call wall. Last stock I want to take a look at is Upstart, a fintech stock. So financials and fintech stocks have been very, very strong recently. So again, this is keeping up with what's going on in stocks, what has been moving recently, and fintech stocks have definitely been in play. So let's see what options traders are doing. And of course, Upstart is not nearly as liquid as, let's say, Robinhood, Tesla. So look at Robinhood, 272 million. That's delta notional for calls. Tesla, puts driving now, 215 million. Nvidia, and I'm looking 500 million delta notional for calls. Let's take a look at Upstart, and that's 10.8 million. But there are definitely some call buyers in Upstart, driving price higher. But Hero is not, to me, not as quite as useful as not as useful as in a stock like Upstart as it is in Tesla, Nvidia. But order flow definitely helpful. And I found, again, I showed an example in Circle. From yesterday, this little bit thinner traded stocks really respond around liquidity. Turn up the heat map just a little bit more. So there you go, a little bit of liquidity, helping to identify entry points for long. See if I can zoom in on this a little bit more to highlight that. All right, liquidity, a little bit of resistance there. Some buyers come in. More resistance. Sky Blue asks, would you sell a call calendar spread at 62.25 for today and tomorrow? Absolutely not. Now that would actually be buying a call calendar, and I just don't trade like that. All right, so that's Upstart. Let's take a quick look at the indexes. All right, so if I did trade a calendar, it would be further out in time. All right, so index is still stuck just below this liquidity at 62.68. Check Nasdaq. Also stuck below the upper daily expected move. Let's check Trace. All right, so Trace again, positive gamma up above, as well as the limit sell orders. NES acting as resistance. All right, last call for questions. All right, many names, welcome, glad you're here. Ask, please teach me volume analysis. If you're looking for volume profile, that's not something that I look at, but Bookmap has many other educators that do use volume profile. Tom B is a prime example, if that's what you're looking at, volume profile. So I would suggest watching Tom B. He's on 11:30 to 1:30 every day. And you can watch his streams and YouTube archives, Bookmap archives. All right. I want to thank everyone for watching. Thanks for your questions and comments. Thank you, Sky Blue and Bulldog, for your questions. Everyone have a great afternoon and have a great 4th of July holiday weekend. And I will see you on Monday. Thanks again. Bye.